There has never been anything like this before. Even legendary investor Jeremy Grantham has published an article about his thoughts suggesting that this will go down in the history books. Never before have we seen such a massive bubble. As he suggests, people in the late stage of the bubble become aggressive to everyone who has held them back from doubling down on the gains over this period, attacking them. Well, we don't have to worry about Grantham's words because this time is different. You came here for the truth, so let me unveil that for you. Today we're going to look at not just what Jeremy Grantham had to say, but I want to lead with that. You could look at some of these old timers and say that they're has-beens. They don't know what's going on. Warren Buffett, he missed out on the tech bubble. He's wrong. He's a has-been, this and that. But I want to mention a couple points. Number one, these people haven't just been investing for the last 6 months. They haven't just been putting money into their Robinhood account over the last little while. We're talking about individuals that have been in this market, in and out of the market for literally decades. They've seen ups and downs. They've seen all kinds of events. Over these many, many decades, they have the experience to see it. Now you look at what has happened with, for example, Amazon. And if Buffett doesn't invest in Amazon, well, he's not so smart, right? Well, look back at all of history and see that there are always consistently new technologies, constantly. It doesn't have to be an iPhone for it to be considered a new technology. Something 40 years ago, that was new technology, and that person might have realized that this was going to be hot at that time and put their money in and so on. You're not going to get every single one correctly, but over your career, if you're generally making wise choices, you're going to end up very, very good at the end of it all. That's the way it works. That's investing. It's not about trying to achieve the maximum gains. The most important thing is not to lose money. But I want to start with this. I want to look at what he had to say and then connect it into a bunch of other info right here. Let's go. I'm not going to show you the entire article. It is too long, but I would highly, highly recommend reading it. I mean, he just gets into everything that I talk about here on this channel, does it in a very good, succinct way. So I will include the link in the description under the sources as always. Check it out. The long bull market has, since 2009, has finally matured into a fully fledged epic bubble. By the way, that word that I took for the thumbnail there for the actual title of this, it is directly from him. But regardless, featuring extreme overvaluation, explosive price increases, frenzied issuance, and hysterically speculative investor behavior, I believe this event will be recorded as one of the great bubbles of financial history, right along with the South Sea Bubble, 1929 and 2000. Okay, so he's putting that here on paper. Those great bubbles are where fortunes are made and lost and where investors truly prove their mettle. For positioning a portfolio to avoid the worst pain of a major bubble breaking is likely the most difficult part. Every career incentive in the industry and every fault of individual human psychology will work toward sucking investors in. But this bubble will burst in due time, no matter how hard the Fed tries to support it, with consequent damaging effects on the economy and on portfolios. Make no mistake, for the majority of investors today, this could very well be the most important event right here, most important event of your investing lives. Speaking as an old student and historian of markets, it is intellectually exciting and terrifying at the same time. It is a privilege to ride through a market like this one more time. So he had a lot to say, I know, but I think it's so important to see what he's talking about and look at all of the different things he talks about in this article and how that relates to everything I have shown you. He specifically states that it's not going to crash tomorrow. It's not going to crash the day after. And he makes absolutely no attempt to predict when that day will happen. but simply said that there is no possible way that the Federal Reserve has the capacity and the willingness to prevent it from actually falling. So at some point, people are going to get burned. He gives the historical examples. He talks about what they are seeing today in so many different ways. Look, it's stuff that I talk about here on the channel, but if you want to read it in his own words, please do so. Right here at the bottom, the one reality that he can never change is that a higher priced asset will produce a lower return than a lower priced asset. You can have your cake and eat it. You can enjoy it now, or you can enjoy it steadily in the distant future, but not both. And the price we pay for having this market go higher and higher is a lower 10-year return from the peak. Some interesting words. Let's be honest. Why is the market going up today? The market is going up based on two factors. Number one, interest rates. Interest rates are very, very key. You know that when interest rates are lower, more speculation takes place. And of course, money printing. Okay, money printing. If you're going to expand the balance sheets, people are going to take more risk. There's more liquidity out there in the system, and so on. This right here just shows you the effect of all of that, not just in one country, but all over the world. Danes get a 20-year 0% mortgage. The country with the longest history of negative central bank rates is offering homeowners 20-year loans at a fixed interest of 0%, 20-year loan. I mean, it's crazy. It's crazy. To me, that's crazy. You are giving away money for free. Borrow to buy a home, and we will give you the money for free. This is unbelievable. If you are in Denmark right now, please let me know what you see. I have a few subscribers from Denmark, and I want you to put a comment down below, please. They are suggesting there's not just one of the banks doing this, but others as well. Major changes are happening right now as it relates to the internal migration in the United States. And I am seeing very clearly what we are looking at with people moving out of areas like New York as well as California. But I'm seeing it especially with New York. And they're moving into areas, whether that's Texas or whether that's Florida and other places. This is just some information related to that, and I'll show you more examples in a minute. The 5 metro areas with the highest move outs in 2020 were located in New York and New Jersey, according to a study by the moving company United Van Lines. They give you the list here, but that's basically what I wanted to talk about. You're seeing it all over the place right now. You are really looking at the heavy taxation, the fact that you've got economic shutdowns really prevailing in New York, California as well. People are suffering. They've lost their business. They've lost their job. And they're looking to a place like Florida and they're saying, you know what? I got to leave everything, but this place here, it's open. It's thriving in some ways. So I'm better off there. So this is what a lot of people and businesses are doing today. And quite frankly, I understand. It's all about survival at this point. So we are seeing some major changes, that's for sure. I think New York right now is positioned very poorly, but I see Florida as positioned much better. Now, that doesn't mean that one is good and one is bad and so on. I'm just looking at the trends. Out of the Wall Street Journal, we're looking at more companies going towards Miami, Florida, I should say. And this article here is talking about the move that's been happening over the last while. All the different businesses, they list them out and talk about the situations. Miami, this city has long pitched itself as an attractive location for finance and tech firms with its tax advantages, very important, flight connections to New York, and cosmopolitan flair. Its efforts appear to be paying off. You had Blackstone right here. They discussed that. Carl Icahn right here, Goldman Sachs eyeing the region, going down further, a string of smaller tech firms, tech and finance firms, and they basically say that the sun, moon, and stars have all aligned. And going on further, the new normal is going to see a lot more growth happening here. I do believe that is the trend, at least for the next little while. If something comes along and disrupts that, of course, we never know. And just like 2020 was a surprise for everybody. And so we don't know what the future has in store, but these are the trends. Here's another example. Virtu moving workers to Florida as you see the changes on Wall Street taking place. This is just something that I will report to you, keep you up to date on. It's not just businesses, the individuals, they're moving. And as a result, we are seeing a frenzy right now with real estate. And you could see this example here. Frenzied Palm Beach home market as buyers bidding sight unseen. You know you've got extreme growth, potentially even bubble territory, at least a short term, when you see sight unseen buys that are taking place regularly. That is never a healthy sign in the longer term, because it just shows you that people are just losing it. They're willing to pay whatever it takes. I saw this specifically years ago, 2017, when you looked at the Toronto market, where people would have to buy in literally hours. If you did not sign on the dot within a few hours, you were not getting the home. The same situation taking place here. Doesn't mean that things will pop. Does not work that way, but it shows you that people are willing to get in over their heads. Because of what's happening right now, you're seeing areas like New York, they are clearly suffering. Businesses are shutting down. I don't know if I pulled up that stat, but I got to talk about this. I think it's the next one, where we look at restaurants, where we look at businesses that are truly being completely eliminated. I think the industry is going to change very rapidly here. What 2021 and 2022 look like compared to early 2020 and before that, it's going to be two totally different things. NYC restaurants start selling frozen dinners. This is very clear. You know, the businesses, as they love to use this word, pivot. They've got to pivot. They have to change in order to keep up with what we're seeing. Unfortunately, this is not a good sign for too many. This is the one I was talking about. Restaurant closings top 110,000 with industry in free fall. U.S. establishments face higher costs, low sales, survey finds. Trade group seeks financial aid package in letter to Congress. Of course, they want the bailout. Every industry wants a bailout today. I'm not sure if all of them will get it. And if they do give them some cash, it's just going to burn up very rapidly, because quite frankly, this is not a long-term solution. There's more information if you want to check it out, but with 110,000, you can see that it's just not good long-term. Because of everything that has happened with the malls, we are looking at how many of these major malls, the tenants inside of those malls, the customers that either can't get in or aren't going in anymore, every step of the way is a problem right now. And we have an issue I covered before, a little more detail. Mall of America is no longer delinquent on $1.4 billion mortgage. I think it's funny because, you know, they modified their terms, which basically means that they didn't want them to completely default on their mortgage and have to not pay back, go bankrupt, and find another buyer. So the lender's basically saying, you know what, we'll give you a break. This doesn't really look good on that lender. What if that happens again 3 months from now, 6 months from now, a year from now, where they make it clear that they can't pay because Sears and JCPenney and Macy's and everybody else are closing up shop, and suddenly you don't have enough tenants to pay their bills because they don't have enough walk-through traffic, the revenue's not coming in, and you have a cascading effect. But guess what? It's already happening. It's already set in stone. There is absolutely no need for this amount of retail. It's just ridiculous. It's too big. It's too wasteful. And trying to revive it is just long-term not a good idea. This right here is definitely the weakest link when you look at the commercial mortgage-backed securities, either from the hotels. That might be more temporary. We'll see what happens. You look at the retail side. I mean, just less retail is needed. There's no doubt about it, especially with the changes from 2020. And then you look at the office space, same situation there. People might start going back to work, but most companies have said we do not need as many people permanently working at the office. Many are moving over to a sort of, 3 days a week you work at home and 2 days a week you work at the office, and it's on a rotation basis. We're going to get rid of some of the leases that we have and so on. Looking at the financial districts in most major cities, that tends to be the consensus right now. And why? Why is all of this happening? Well, I'll read you this quote. What we need for the markets is the Fed to continue with the pedal to the metal approach. That's the term that I use all the time here on this channel. And I suspect that they will continue. As long as the Fed remains supportive of markets, the path of least resistance is going to be up. He has some wise words. I just wanted to bring that to you. We'll see what happens, because nobody is able to predict this situation. However, the Federal Reserve and the central banks around the world are absolutely making this all happen in the first place. Last one I wanted to touch on here, just something to see what's happening with these industries. As I talked about, we've got the malls shutting down, but you got businesses like Amazon. They hired in 2020, they hired 400,000 people, expanded their fulfillment centers by 50%. They still can't keep up. They are still limiting the quantity of, if you're a seller, they limit the quantity you can send in because they cannot keep up with it all. Okay, as a result of that, there's a lot of construction that is taking place. All right, it's not just on the residential side, but we're seeing it with the fulfillment centers as well, and the 3PLs, third-party logistics companies that are shipping stuff to and from all these different places. Okay, so that's happening now, but this is an article connected in with that information. Amazon makes first aircraft purchase to expand cargo network. They're buying 11 used Boeing 767-300 planes. The first time the online giant has purchased rather than leased aircraft. Okay, so they're buying it from Delta and WestJet. And my thoughts here were that you've got these companies right now, these airlines that are suffering. They've got all of these airplanes just sitting parked all over the place. And I don't know what they paid exactly, but I'd be interested to know if they got a nice discount considering the current situation. Now, these companies here, if you know what's going on, when you're hurting for revenue, you will definitely sell off some of these assets that you have. You'd be happy to pay, just like if somebody is going through divorce, they want to sell their house, or it's a estate settlement, they want to sell that house, they will do so at a lower price. People get a good deal on these things, but you're doing that person a favor, just like this situation right now with the airlines as you're seeing it. I think it's just interesting because of what's happening and all the dynamics involved. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce, you are interested in this on any level, you can learn for free at theamazongps.com. Wait a second. Have you seen my 2 books? My 2 books explain everything related to the financial system. All those details, check it out at the link in the description. And if you want the audiobook, themoneygps.com. Hold on, don't go anywhere, because this video has so much important data. Definitely check it out. Click it. I'll see you there.